All right, we're going to go ahead and get rolling. Welcome everyone to our webinar tonight. It's great to be back out presenting to you all. As always, it's a pleasure. My name is John Mantia. I'm the CEO and one of the co-founders here at Parco. I know a lot of you are familiar with us, but for those of you who are new, um, we work with federal employees across the country and around the world, helping them plan out their finances and retirement, no matter what stage of their journey that they're in. So we work with folks who are just starting out their career, or who are just beginning to work for the federal government. Maybe you're in the middle of your career and wanting to make sure that you've got everything in place. And then certainly a lot more folks lately have been wondering and wanting help toward the end of their career, or as they're thinking about wrapping up their career, how do they make the most of the benefits that they have as federal workers? And that's what we at Parco do every single day. So tonight's webinar is going to be covering a lot of different things, particularly about all the news that's been lately. Like I said, it's great to be back presenting to you all. A few ground rules before we get started. If you have questions, there's a little Q&A chat window. You can ask your questions there. We'll try to answer them either live, like during the presentation. Lauren and Danny, two of my teammates, are going to be able to answer some questions during the presentation. But especially if it's valuable for everybody else, we'll save those questions to the end. I'll repeat them out loud and we'll answer them so the whole group gets to hear. As we do have folks, we have a lot of folks on tonight. Also, throughout the presentation, you'll notice that there's QR codes on every slide. At any point in time, you can scan that QR code, takes you to our portal or into our platform. You can create your account there, and you can schedule a time to schedule a free one-on-one appointment where we'll go through all the things we're talking about today and anything related to your federal retirement with you one-on-one. So without further ado, we're going to go ahead and get rolling. Tonight, talking about the big, beautiful bill and a lot of the things that have changed since that was passed just about a week ago. So we'll talk about the different concerns that federal employees had about the BBB. It was a very controversial piece of legislation when it was first proposed. Then we'll talk about what actually passed. We'll talk about some recent Supreme Court rulings. Then we'll talk about how Social Security and Social Security taxation is going to be changing with the BBB legislation. We'll talk about Trump accounts, which are another new thing that federal employees and retirees should be thinking about in retirement for those for whom it applies. Talk about some key takeaways, and then we'll walk through about how to wrap things up and get started. So let's get rolling talking about federal employee concerns. So when the BBB was first proposed, when congressional Republicans in the Trump administration started talking about what they wanted the BBB to include in different provisions, there were some things targeting specifically federal employees. It's not news to anybody that the administration has a different view about how the federal workforce should be. We've done webinars in the past about how the Trump administration wants to shrink the size of the federal workforce. And so as part of changing the federal workforce, there were talk about changing some of the benefits that are really key to federal employee retirements. In particular, they had talked about increasing FERS contribution rates for all federal employees up to what it is now for all new federal employees of 4.4%. They had talked about eliminating the FERS special annuity supplement, which is that special supplement for federal workers between their minimum retirement ages and their age 62 if they retire, as a bridge payment before they can start getting Social Security. They talked about switching the pension calculation from a high 3 to a high 5. They had also talked about levying a fee for people that were filing a case with the MSPB. They'd also wanted to prioritize auditing all FEHB participants. And then they'd also proposed that all newly hired federal employees could choose between at-will employment or having an even larger 10% increase to their FERS contributions. So all of these things, if they had been passed and if they had been implemented, would have meant that federal employees now would have paid a lot more for their retirement benefits in the future and would have materially changed a lot of people's retirement plans. So what actually happened? So what actually passed? Well, the proposed increasing of the FERS contribution rate for every federal employee, that was not included in the past legislation. The elimination of the FERS annuity supplement, that was not included in the past legislation. The switch from a high 3 to a high 5, was not included in the legislation that was passed. Having a fee levied if you're filing a case with the MSPB. That was not included in the past legislation. So these main concerns that federal employees and retirees had, or federal employees who were thinking about retiring had with the proposals in the BBB, those were not included in the final legislation. Now, one thing that was included is that there will be an audit of all FEHB participants. So the administration and Congress is concerned that there are people that are having access to or that have access to FEHB who maybe aren't eligible for it. So they're going to be auditing all the FEHB plans to make sure that the folks who are on the rolls for those plans are actually eligible to continue into those plans. And also, not included in the past legislation was the ability for federal employees to be at will or to have an even higher increase in their first contributions. So over the past several months, I can't tell you how many people have spoken to me or people on our team or have asked us in webinars, hey, what do you think is going to happen? What do you think about what happens with a high 3 or a high 5, or this increased contribution rate of the first annuity supplement? It was a big source of concern for understandably the entire federal workforce, but these proposals did not make it through into law. So nothing has changed when it comes to your benefits. Now, there have been some recent court rulings, and if you have any questions, please ask them in the question window. There have been some recent court rulings that do impact federal employees. So this just happened earlier this week. The Trump administration back in February had issued an executive order instructing agencies to begin preparing for large RIFs, large reductions in force. Judge DuBose blocked agencies from creating these RIF plans. There was basically a stay on that ability. Well, the Supreme Court just a few days ago ruled that agencies may continue creating these RIF plans. So where the riffing process and the riffing mechanism, the planning mechanism had been delayed, that may now continue. And so this means that those plans can continue. We expect that there will likely be more court challenges as RIF plans start to become RIF actions. But it does seem that RIFs are now more probable. And so I imagine many people on the phone tonight or on the webinar tonight are concerned about what happens if there is a RIF. And so just to refresh, there's a few important things to note. There are folks that are particularly protected from RIFs. So these are people that are considered essential employees, so folks that are expected to work during a government shutdown, or from what the Trump administration has specifically said, folks in law enforcement, people involved in border and national security, military personnel, presidential appointees, Schedule C and executive office appointees. So those folks who are essential are most insulated from RIFs. The people that generally have the highest potential for RIFs are those who are probationary, those who have misconduct records, reemployed annuitants, those who are on term or temporary positions, or those who are in other non-essential roles. And so if you do face a RIF, so we always like to help folks plan for what to do if this is to happen. If you're not eligible for an immediate retirement or a discontinued service retirement, which is what we'll talk about in just a second, there is a severance calculation. So you'd be owed severance. Your severance amount is 1 week of pay for every year of service that you have under 10 years, and then 2 weeks of pay for every year of service that you have over 10 years. So let's take an example of somebody like NIH Neil. He's worried about being riffed, or that, let's say he does actually get riffed. He actually gets ripped. He has 22 years of service. He's 44 years old, and he makes $100,000 a year. What is the severance payment that he's owed? Now, he can't get a discontinued service retirement because he's not of the age and doesn't have the years of service, but his severance pay would be $91,231. He would get paid that in increments of $3,833 every 2 weeks for a period of just under 48, so essentially 48 weeks. That's how they would pay out severance if it were owed to somebody like Neil. In addition, he would be eligible for a pension when he turned 62, that pension would be calculated as 1% times his creditable years of service times his high three. So Neil has a high three of $100,000, let's say. Let's say that's what his salary is right now, just for easy math. So and he had 22 years of service. He would be owed 22% of that 100,000 or $22,000 when he turned 62 in 18 years. He's 44 right now. So that's what happens if you're RIFT and you're not eligible for anything else. If you do get RIFT and you're one of those folks, you don't get to keep your FEHB for the long run. You don't get to keep your FEGLI. Your FEDVIP terminates immediately, but importantly, your TSP or your thrift savings plan, that does go with you. Now, those folks who are excluded from severance pay are those eligible for immediate retirements, those offered similar federal government jobs, reemployed annuitants who are already receiving a pension, term or temporary employees, and those with less than 12 months of continuous federal service. Now, I want to highlight those who are eligible for an immediate retirement because under normal rules for a federal retirement, you need to have hit your minimum retirement age, which is generally age 57, and have 30 or more years of service. You need to be age 60 with 20 or more years of service, or you need to be age 62 with 5 or more years of service. So long as you satisfy one of those three requirements, you're fully eligible for a retirement and get an immediate pension. However, if there is a RIF, the eligibility rules actually become looser. So in addition to those three, you could also be fully eligible for an immediate pension and an immediate retirement if you have 20 years of service and you're age 50 or more, or you're any age and you have 25 years of service. So long as you satisfy one of those two requirements or one of the three that I mentioned, you're eligible for an immediate retirement. If it's under these two, it's called a discontinued service retirement or a VERA. So that means you get an immediate pension. It's calculated as 1% times your years of service times your high three. And the implications are if you are RIFT and you're eligible for a DSR or an immediate retirement, you get to keep your federal health care. That is an awesome benefit. So in addition to getting an immediate pension, you get to keep your FEHB for life. You also get to keep your FEGLI, your Federal Employee Group Life Insurance. You get to keep your FEDVIP if you want to keep that. And you'll be eligible for that first supplement once you hit your minimum retirement age, depending on what age you are when you retire. So we wouldn't normally spend this much time talking about RIFs, but especially given the recent court ruling and the fact that agencies can now start the ball rolling on their RIF planning, we wanted to refresh everybody about what the different levers are. And that's something we'll help you plan around when you book an appointment with us or you create your account on our platform on app.goparco.com. So now let's talk about the different changes that are coming with Social Security. This is a big deal. So something we say a lot here at Parco is that federal employees are different for a lot of reasons. For most Americans, in retirement, most Americans really only have Social Security as their retirement benefit and maybe their 401k or their savings that they have. For federal employees, you have those things. You have your TSP, you have Social Security. But then on top of that, you have your pension. You get to keep your health care. You get your FEGLI. You might have the FERS supplement. So you have these extra retirement benefits. So something important with the BBB is a change for Social Security that affects all Americans, including federal employees. The big change that comes with Social Security is this new, what's called a bonus deduction. It applies for those over age 65. It's a new additional $6,000 deductions for single filers and an additional $12,000 for married filers. And the intent of this additional deduction was to reduce the taxes that retirees or senior Americans pay on their Social Security. So a big point of contention in Congress and among retirees is that you have to pay income taxes, federal income taxes on your Social Security benefit. And so this additional deduction is built to help offset a good portion of those federal income taxes that you'd have to pay on your Social Security benefit, which means more dollars in the pockets of seniors. And so How this will affect you depends on your income in retirement, but we put a simple example together of Sam. So Sam is single. Let's say he worked for the DHA. He's 65 years old and he's planning to retire this year. He has 30 years of service. His high three is $120,000. We need those to calculate his pension. And his Social Security at age 65 will be $3,100 a month or $37,200 per year. Now, to understand how this will impact Sam, we have to understand that the way the IRS looks at your income statement is different than how your income statement actually functions in reality. So let's first walk through Sam's taxable income statement. So Sam, under the regime before the BBB, his pension would be $39,600 per year. That doesn't change under the BBB. His annual Social Security that's taxable, as you'll notice, his annual Social Security is actually $37,200. Of that $37,200, given how much Sam makes as his pension, 85% of that Social Security will count toward his taxable income. So $31,620 of that Social Security benefit will count toward his taxable income for the IRS's purposes. So his adjusted gross income before we take out any deductions is $71,220. That doesn't change. However, he's got the standard deduction, $15,700. Then he has an extra senior deduction of $2,000. And then he has the bonus senior deduction of $6,000. This is the change under the BBB. So his taxable income goes from $53,520 to $47,520. So it goes down by that $6,000. What does this impact? How does this impact his taxes that he owes? Well, his gross pension and his annual Social Security, again, don't change, but his federal taxes that are due go down by $1,320, given the tax brackets that Sam's in. So that means that all else equal, under the BBB, Sam gets an extra $1,320 per month or per year, pardon me, which is about an extra $100 per month. So we wanted to walk through the math on that, and I can tell there's a lot of questions about that. So if we need to revisit it, we certainly can. But there's that's how the math breaks down for the BBB. So it's a meaningful difference. It's why when people talked about it passing, it said something like 90% of seniors will see a tax cut or will see increased dollars in their pocket. It's this math that's flowing through there. So on top of all these other changes in the BBB, there's also something called Trump accounts that we want to mention as well for maybe folks on the webinar tonight who are a little bit younger, or maybe you're a grandparent, maybe you are a grandparent and you just had a new grandbabies, or your kids are planning on having kids. So there's something new called Trump accounts, which offers parents for their children $1,000 for free for any child born between the years 2025, so this year, and through 2028. So if you open a Trump account, the government will endow that account with $1,000 for free. So if you just had grandkids, or if you know your kids are having grandkids, or if you just had a kid, once these accounts become available, it'll make good sense to sign up because it's a free $1,000. The proceeds must be invested in a low-cost index fund tracking a major index. And the funds are untouchable, but they are the child's until the child turns 18. Importantly, there's no income limitation. So if you make $1 million a year or you make $10,000 a year, you can contribute to a Trump account. That's not the case for, say, an IRA. And the maximum contributions that you're allowed to make per year are $5,000. So you can contribute as an individual $5,000 as well to these accounts. So the benefit is that it allows you it gives you an incentive to start saving, if you have kids, if you have grandkids, when they're really, really young. And the magic of compound growth can mean that by the time that they're 18 or when they get older, they've now got a nice nest egg that they can start to use to pay for school, put down payment on a house, help launch a family. So we've talked about a lot of things tonight. We've talked about, um, you know, what things to do, some different checklists, some different things that impact federal employees. And so I wanted to go through a couple of the main things to take away. A lot of the concerns that people had when it comes to the BBB and what was going to happen with it, and how it was going to change federal employee retirement, those didn't take effect. So you can breathe a real big sigh of relief there. Something else we'd recommend you do, make sure, especially with RIF talk and all this, all the things that are happening with the federal workforce are still happening. Save your documents. I was speaking with a client the other day who said that she had access to a lot of documents and something changed at HR, and now she has access to a lot fewer documents that she wanted to save to make sure she had access to as part of her EOPF. So the best time to do that is today. Open a Trump account if you're eligible, or if it's not you, make sure you tell your kids to open one for your grandkids. The bonus senior deduction does mean more money in the pocket of retirees. And then it's never a bad time to start planning. And that's something we help, folks do, whether they're near retirement or they're far away. And so when you create your account and start logging in, what's nice is that you won't have to keep track of all of this or memorize all this information for you. Our platform does all of this and will recommend, hey, if you say you have kids that are under 4 years old, hey, let's open up a Trump account, like all those different things to try to keep you on track for the future. So I know that we wanted to put this together so people had an opportunity to ask any questions that they had. So I'll happily answer them. Danny and Lauren will as well. It's always a pleasure to present to you. We're looking to get back now that Fourth of July is over, to get back into a regular webinar cadence to cover topics like this that are so important to federal employees and retirees. So with that, I'll start answering some questions as we see them come through. Da, 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 da. Let's see. Da, 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 da. So there's a question about how Trump accounts are established. Um, are they agency specific? No, so we will see how they end up shaking out here over the next few weeks and months, but they'll be individual accounts very similar to an IRA or a bank account even. It'll be your own. It's not something necessarily through work. It's not even like a TSP or a 401k where it's employer sponsored. Lana, that was a great question. So there's a question about just, us and Parco and how we work. So, we are creating an account and getting help from us for retirement planning is always totally free, completely free. We're a financial planning and financial services company. So we help people plan for their income, plan for their legacy with life insurance. We can help manage your money or do your taxes. Basically anything a federal employee could need, we can offer in one place. That's a great question, Mr. Stabler. Thank you. Da, 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 da. So there's a question about how retirees under civil service that received, oh, from Mr. Dunham. Hey, Dwayne. Um, Retirees who retired under civil service that received a lump sum payment from Social Security, how will they be affected by the BBB? That was not particularly clear in the legislation, which we read through. That was not particularly clear. It's really if you're receiving Social Security going forward and you're over age 65, you'll be eligible to take this extra deduction. I wish I could give you a better answer, but there wasn't any specific edge cases about that in the legislation. Oh, good presentation. Thank you, Mrs. Pleasance. There was a question about like, do you have to schedule a consultation in order to set up an account on GoParco? You do not. So you can create your account on GoParco. You can see how your numbers look. You can play around with the website, and you can do it right through there. You can do it totally on your own, and then if you'd like, you can schedule a meeting at a time and date of your choosing if you'd like to. we know there's a lot to consider and a lot to think about, and so we found a lot of folks like being able to go through things well. So there's another question. It looks like if only, so there's a question about like if let's say your spouse is 60 and you're 66, what deduction do you get to take? That is not particularly clear to me in the legislation. But I believe the answer is that you can only do it, you only be able to do it for the eligible federal or the eligible employee or the eligible person over age 65. Um, but if you email us that question, we will try to get an answer from the legislation itself. But I did not see that edge case particularly explained. Keep the questions coming, they're great. And as always, too, if there's a topic that you'd like us to cover that we haven't covered, or that you know is being talked about, let us know in the Q&A section as well, and we'll add that to our list. Because I know we'll be doing another webinar here either next week or the following, and getting back into our regular webinar Wednesday cadence. Okay, any information on how to open Trump account for a child? Da, da, da. So we have not, the bill just passed, what was it, last week? We haven't seen the specific process or what companies or what firms are gonna be able to offer that. So I think that's more of a wait and see right now, a rule, until we see what the mechanism is. My expectation is that places like Fidelity, or we use Charles Schwab, will make it so that way folks can open those just like they would a brokerage account or a 457 account or anything else like that. Okay. Thank you for all the compliments. It always feels nice to get those. Um, there's another one in here, another question that says people were printing off lots of paper a few months before retirement. Um, was it actually necessary? It depends on where you work. You know, some folks it was difficult for them to get their EOPFs digitally, so they ended up having to print them, and then it took them to a scanner to do so. You know, our rule of thumb is that you might as well um, try to get all the data that you can and save it to yourself when you need it, because you never know when you'll need it. What's nice too is that when you create your account on app.goparco.com, on that documents tab, you can upload any and all documents that you'd like there and store them in one place. So there's a question about the Social Security deduction. In the example we gave, it essentially reduced the $6,000 additional deduction based on that individual's income. It reduced their taxable amount by $1,320. So it saved them $1,320 per year in taxes. Um, so that was the benefit. There's a really good piece of feedback or a really good piece of advice in the Q&A that says um, they're a former USAID employee, and they went through the whole riffing process, and she recommends that you print everything and save everything from your EOPF, because when you lose access, you don't have access to it. Um, and especially because you can't access those sites when you're retired. So EOPF is your electronic online personnel folder. Some people like, and I think that the simplest answer is to save every document that you can. So if it's your step increases, if it's your performance evals, if it's your SF50s, basically everything that you can, have that as a copy for yourself. Because look, the reality is you will likely not need it. But I had an individual I was working with the other day, and she mentioned that she had some breaks in service. She left and came back a couple times, and she is worried now that she's retiring that she won't be able, like, that her agency will say she has, let's say, 20 years of service, when in reality she has 30 years of service because of these breaks in service. And without that documentation, she won't have a way to prove that she worked this time. And so that's why we recommend you just have those records for yourself, um, to have access to. So Todd asks a really good question. If I decide to file for Social Security at 62, which a lot of federal employees do, because they were federal retirees do, will I be eligible for the additional tax deduction when I turn 65? The answer is yes. Once you're 65, you'll be able to do so. Great question, Todd, and good to have you on tonight. Oh, thank you, Miss Patricia, for the nice compliment. Da, da, da. Ms. Sheila, I see your question about how the Trump Act is similar. Would you mind just kind of clarifying that question in the Q&A section, and I can give you a better answer? Keep those questions coming. They're great. And we've already gotten a few really good suggestions for future webinars about TSP income planning, and then how to best make sure you've got everything in the row for retirement, and a couple questions about Roth IRAs. So a lot of good things in the hopper. There's a question about, do we assist with estate planning? We do. We do. So we help folks with setting up a trust and a will. Lauren actually did that with somebody this morning. So we definitely help with that as well. We offer a comprehensive retirement and financial planning experience. Oh, so Sheila asks, I said that a Trump account is similar to what? And she didn't catch it. So a Trump account is similar to an IRA or to a brokerage account in the sense that it's an individual account. It's not tied to your employer. So there was a question earlier about whether or not federal employees would have to wait for their agencies to make it so they had access to a Trump account. Well, you can once the ability to open one is made, you'll be able to open one on your own individually. Um, and if you have a child under or who's born in 2025, 6, 7, or 8, the government will deposit $1,000 on their behalf into that account. All right, see, just a few more questions are getting answered live. Any other ones that you all have before we pop off tonight? I hope you found this helpful. We know the BBB was something that was basically being talked about since the beginning of the Trump administration, especially those changes to federal employee retirement. I think it was a big concern even during the election. And so we had a lot of folks reaching out to us saying, man, like, run this scenario if it's a high five, run this scenario if I don't have a first, uh, run this scenario if I don't have, if I have to contribute more to my pension. Um, and so that obviously caused a lot of concern for federal employees. And so knowing that a lot of those concerns or those items that were concerns, those proposals didn't take effect, is very beneficial. I think it's giving a lot of federal employees an opportunity to take a big sigh of relief from what they were concerned about. And from our understanding, anybody can open a Trump account. I don't necessarily know if it's just tied to children, but the real benefit is the free $1,000 that you get if the child is under or is born between now and 2028. Keep those questions coming, though. I'd see a bunch more coming in. All right. Well, if there's no more questions, I'll let you all say goodnight. As always, it's wonderful to present to you all. Be on the lookout for our emails to see any new updates or new presentations we'll be doing. Uh, we'll be definitely doing a section on RMD withdrawals and optimization there, Miss Pam. So definitely be on the lookout for that. We're going to try to get back into a weekly webinar cadence now that things have gotten a little less crazy for some stuff. If you haven't already, make sure you create your account on app.goparco.com. It's totally free. Right, it's right through your browser, and it's a great place to start planning. We've built it intentionally for federal employees like you, so it's meant to be very, very useful, helpful, and so you can actually make decisions and retire confident. So we've got a lot to do, but hopefully you all feel a lot better. Uh, and we'll be doing sessions on Roth conversions and TSP, Roth conversions outside of TSP. I have a feeling we're going to be very, very busy with webinars from now until well, for a long time. For a long time. If you have any feedback for us, of course, let us know. And we'd love, when you schedule your appointment, we can go through a lot of things one-on-one. If you have ideas for webinars, you can tell us then too. It's a pleasure to present you all tonight. And thank you for all the compliments. It does mean a lot.